Okay, so we're on our fifth credit here. Child tax credit was one of those credits that had a lot of changes to it, but only for 2021. So for 2022, we revert back to the pre-2021 rules. But for our purposes, we're going to work under those 2021 rules. Okay, so the child tax credit has it used to have a refundable and non-refundable portion, but for 2021 it was 100% refundable. They also increased the amount of the child tax credit. It was $2,000, and it didn't matter what age the child was. For 2021, however, it changed to $3,600 for children up to age 6, under age 6, right? So from 0 to 5, and then down to $3,000 from age 6 to age 17. Under the old rules as well, 17-year-olds did not qualify for the child tax credit. It ended when the child turned, in the year that the child turned 16, or turned 17, then they were no longer qualified. But now it was extended up to 17 years of age. So also in 2021, in July, they started sending those who qualified for the child tax credit prepayments of it, unless you opted out of it. There was an opt-out for individuals who did not want to receive those prepayments, but for those individuals who wanted the prepayments, they were automatically enrolled in it, and that meant that on a monthly basis, at least for the last 6 months of the year in 2021, they received up to half of their eligible child tax credit in the form of a check every month, divided by the 6 months that were remaining. Again, that ended in January of this year. It has not been renewed. I doubt that it will be instituted again. It was another one of those kind of COVID-related benefits, but I know that there were certain members of Congress who wanted to extend it beyond that, but it didn't have the political will to be able to extend it further than 2021. So it was instituted and then it was taken away. But for our purposes, these are the numbers that we want to work with. We want the $3,000 refundable child tax credit for individual or for children ages 6 to 17, $3,600 for children under age 6. Now, there are two components to it though. The first component, where'd my pen go? Did I leave it back there? Get in. Is kind of under the old tax regime. So remember I said it was, before 2021, the limit was $2,000. After 2021, the limit is $2,000 again. So we still have this $2,000 child tax credit. And essentially what they just did was they added an extra level to it that was either an additional $1,000 or an additional $1,600. Now, the reason these are separated out is because we again have income phase outs related to this credit. But the income phase outs are different. The $2,000 child tax credit has the original phase outs attached to it, which for married filing jointly was like up to $400,000. Essentially, once you reach that level, then you started to phase out of being eligible for that $2,000. The $1,000 or $1,600, however, had a lower phase out amount. I think it was limited to $150,000 or under for married filing jointly, $75,000 for single. Head of household was like $112,500. So you've got kind of these two buckets that are, or these two different categories of child tax credit under, and this was kind of the additional child tax credit. And so they had different rules attached to them, okay? Child has to be under age 18 by the end of the tax year and be a U.S. citizen or resident, and the child has to be younger than the person claiming the credit, okay? So let's talk a little bit about what children qualify. Children will do to qualify. So for those individuals who would not ordinarily qualify as under the child tax credit, if they are a dependent, they may qualify for this $500 non-refundable credit for other dependents. So if you think back to chapter 2, when we talked about the dependency, the rules for dependency, remember we had qualifying children and we had qualifying relatives. So individuals who were qualifying children, as long as they were under age 18, would qualify for this child tax credit. Other individuals who, maybe they're qualifying children for the dependency, but they're over the age of, they're 18 or older, or relatives, qualifying relatives might qualify for this, sorry, I'm pointing to the wrong thing, to this credit for other dependents. Okay, again, child tax credit is refundable. This credit is non-refundable. This is on a per qualifying individual basis. So if you've got two individuals, maybe you got 2 college students, right? They're 18 and 21. They're still your dependents. They meet the requirements, they could qualify, each of them would qualify for this $500, so you get a total $1,000 tax credit for them. If you had 2 children under the age of 6, so you've got a 3-year-old and a 5-year-old, and you otherwise qualified with regard to the income limits, each of them would qualify for $3,600, so a total of $7,200 for those children. So you can see that adds up very fast, especially the more children you have, right? Finally, the children are helping to pay for themselves. Doesn't really make up for what they cost, but anyway. But again, they've got to be U.S. citizen or resident, and for the $500, they also have to be a U.S. citizen or resident. They cannot file a joint return unless they're claiming a refund, and they're not claimed for the child tax credit. So the same person can't qualify for both credits, right? If they don't qualify as a qualifying child for the child tax credit, then they may qualify for the $500 credit for other dependents. So, talked about the fact that it is subject to 2 different phase outs. The first phase out reduces the credit from the phase out reduces it from $3,000 or $3,600 to $2,000 per child. That is the upper income phase out. That starts at like $400,000. And then the second phase out is for that additional income in excess of the threshold amount. So you would take whatever the income is, let's say we got 175,000 as varied filing jointly. Subtract the 150. This is 25,000. We'd multiply that by 5%, and that's what, $1,250? So it's gonna be reduced by the $1,250. So instead of, if you got 2 kids that qualified for, well, we got 1 kid that qualified for the 3,600, we would subtract the 1,250 from that because of our income being over, well, not the 3,600, 1,600. You're gonna get the 2,000 regardless. In this income range, you're gonna get the full 2,000, but the 1,600 is gonna be reduced. So 350. So the total credit would then be 2,350. So now this is kind of in that case. Okay. So that's how the phase out works. Just 5% of whatever the amount is over and above that phase out, where that phase out range starts. Until you get to the point where all of it is phased out. Right? Let's see. So let's look at these examples related to the first phase out. We've got taxpayer A, single, 2 qualifying children, ages 8 and 10. Income of 65,000. All right, single, 65,000. Not going to phase out of the first, right? Because that starts at 75,000. Taxpayer will be entitled to a fully refundable credit of $3,000 per child. If the taxpayer's income was 80,000, then the credit would be reduced. 5,000 times 5% would be reduced by 250. Total credit would be 5750. Now, let's assume they've got income of 165,000. This income is $90,000 greater than the threshold amount. They're still single. The reduction would be 4,500. However, that's more than that additional $1,000 for those children, right? So we would reduce it. So even though this is reduced by 4,500, he's still going to get the $2,000 per child. That's not going to go away until this individual reaches a higher income level, right? Taxpayer B, married with 1 qualifying child, age 4. Income is less than 150,000. Taxpayer would be entitled to a fully refundable credit of $3,600 because the child's age 4. If the income is 160,000, which is 10,000 above the phase out, which would be $500, 5% of that, $500, then the credit, this 3,600 would be reduced by 500. Okay? So the first phase out, so you've got to remember you've got 2 phase out limits here. That second phase out doesn't come into play until AGI is more than 400,000 for married filing jointly, 200,000 for all other taxpayers. Then that phase out is, so for each $1,000 over that amount, the credit is reduced by $50. So, and it's 1,000 or part thereof. So let's take a look at how that would work here. We'll use this example. Taylor and Drew, they've got 2 qualifying children and they file jointly. Their modified AGI is 416,322. Well, that's essentially going to round to 417 because we're going to take the 1,000 or part thereof, which means they are $17,000 over the limit, right? So we take for every $1,000, so there are $17,000, their credit is reduced by $50. So they've got 17 times 50, which they gave us up here, So they've got, let's see, 2 children. This would be the maximum credit would be 4,000, and we'd have to subtract the 8,500. Whoops. I don't know what that is. So 3,150 is their credit, CTC. So let's do another one. Let's say that we had, now you're not gonna have to do that other calculation if you're up to this income level, right? Because they just don't qualify for that additional amount. So let's just say we had income, married filing jointly, income is 442,000. So what we're gonna do is figure out, okay, so how many, so we're gonna subtract the phase out limit, so we got 42,000, actually let's do it this way. Let's make it an uneven number, so 442, 172. So we're gonna subtract that 400,000. We're left with 42, 172. We've got to round this up at this point because it's each $1,000 or part thereof. So essentially, we've got 43,000 divided by 1,000. We've got $43,000. 43 $1,000 chunks, right? Multiply that by 17. What's 43 times 17? How much? 731. Okay. Times $5. I'm sorry, $50. What's 731 times 50? Okay, that's too high. Is this 43 $1 times, why do I have 17 here? I did this wrong. Why do I have 17 there? Where did I come up with 17? Sorry. 40, I'm sorry. 43 times 50. Sorry. 2100?
2150.
All right, 2150. If they've got 2 kids, maximum is 4,000, right? We're gonna subtract 2150, and they're left with 1850 for their credit. I don't know where it came. I don't know where 17 came from. Out of the blue. Was it? Maybe it was part of the last problem. Oh, it was probably from up there. Okay. All right. Questions. All right. I'll leave that there for a second. See what else I have to say here. Child tax credit. Here's where they talk about those advance payments, those prepayments. It created it created complication. Everything we do creates complication. So it created complication because they based the advanced payments on either the 2019 tax return or the 2020 tax return. However, the 2019 tax return and the 2020 tax return, if you qualified for the increased child tax credit based on those numbers and you actually happened to make more money in 2021 and you wouldn't have qualified for them, then you had to pay it back. So if you got the prepayments. Unless your income was below certain threshold amounts, then you didn't have to pay it back. Okay? But it just meant that you got another piece that you got to reconcile with, okay, how much advanced child tax credit did I receive? How much was I entitled to? Do I meet the phase or the threshold, the safe harbor amount? If not, how much do I have to pay back? Okay. It's not a thing anymore. It was only for 2021, but it did create some additional complication for taxpayers